Okay, what is going on, CYPRX YouTubers? Welcome back to another CYPRX YouTube video breakdown. As always, if you're interested in learning about cryptocurrencies, commodities, indices, foreign exchange, please go ahead and consider subscribing to the YouTube channel. We are almost at 6,000 YouTube subs, so we really do appreciate all the love and the support. In today's video breakdown, we are going to fully go over an XRP trade breakdown that I'd mentioned to you guys I was looking at on Twitter. Currently in a 1-to-2 risk-to-reward ratio as of right now. And at time of recording. So I hope that you guys enjoyed this video breakdown. Smash that thumbs up button if video breakdowns like this help you all out, understand price action a little bit better, give you guys a better understanding on this cryptocurrency market and the price fluctuations that we experience as retail traders. Without further ado, let's get started in today's video breakdown. Okay, so first we're going to start on the 3 hour and then we're going to go down. Okay, so we're going to start higher time frame, top down analysis. What I want you guys to pay attention to is this area over here. 3 hour time frame, top down analysis, covered that. Going down from my whole entire mindset coming into this trade, something I want you all to understand about trading that 90% of people don't understand. I'd mentioned to you guys, and this is again just for the recording, I know that I'm reiterating this, but 90% of people think too much in the now. And yes, as traders, we need to react to the now, but we need to understand what the banking institutions are doing. And the banking institutions are moving price action into areas and pockets of liquidity which exist in the past, okay? So we can utilize that information to our advantage to get an edge in this market. Nothing is guaranteed in this market. As traders, our goal is to generate some type of confluential edge in this market to give ourselves the best risk to reward. Nobody can be 100% right 100% of the time. Even myself, I lost a trade last night during London session because I got greedy and scaled into my position when the market wasn't done retracing, okay? And I shed that light all to the CYPRX students. I send them my analysis. I send them my trades. I send them my entries on MetaTrader 4, okay? My students can physically see where I enter in price action and that I'm not making this stuff up, what the banking institutions do and how we as traders, right, can react to what the banking institutions are doing. So right now I'm currently floating in this position. You guys had seen from the beginning of the original Zoom call video. It's currently, as of right now, I think it's like a 1-to-2 maybe. Let's see, 1 to 1.5. Okay. And I'd said that I was looking for price to come up here to the 47-cent psychological level. And I'll break down why in just 1 second. Let's go back to the 3 hourly now and talk about that area of interest that I mentioned to you guys. First, I want to start and take your attention to the ideology behind the fact that banking institutions, okay, they like to piggyback off of each other or previous areas where banking institutions during that same session bought from, okay? So currently when we entered into this kind of like down sloping, whatever you want to call it, retail pattern, channel, freaking wedge, I don't even know. I don't know what retail traders call this stuff because I don't look at this as a retail trading pattern. I look at actual patterns in the market. And so with that being said, we see this New York session right here, okay? This New York session was very significant via what they did with price action. And you can see here by highlighting this key area, which I'll go into on the lower time frame in just 1 second, which is a 15-minute area of interest that I teach about on YouTube and teach in detail to the CYPRX students. Dragging that all the way over, we can see where this New York session took a buy from today. They took a buy from where banking institutions bought from a previous session in the form of discount, okay? And again, that's confirming the ideology that banking institutions like to piggyback off of each other. So why did I highlight this area right here as an area of significance, okay? Now I want to take your attention to the hourly chart. Okay, so this significant area of interest had my attention based off of a couple of different things. Number one, it printed the definition of bullish order flow. And if this level, collectively speaking and logically speaking, holds, we could see a potential reversal on XRP based off of what this price action information is telling us. With that being said, I want you guys to pay attention to these 3 sessions right here. We see New York session, New York session, New York session, and then the 4th session, New York session, okay? So we see that this New York session sold off, okay? We see here the New York session starts and they sold price action and then they bought at a low. Now the new daily candlestick open for this session, what happened in price action? Well, New York session, passed price action over to Asia session. Here's that session right here. And they were not going to buy from a high. So what did they do? They manipulated price to grab and activate liquidity beneath New York session lows right here. And then they took a buy position. Now at the beginning of a London session, if I zoom in, you guys can see how London session got past price action at a high, and they manipulated price and they piggybacked. You guys can see in the wicks right here, okay? They piggybacked an order off of Asia sessions buy, okay? So now we see New York session took the opportunity to buy. Asia session manipulated price to take the opportunity to buy. London manipulated price to take the opportunity to buy, and then price reversed and never revisited this area. In a sense, it never created a lower low. It created a higher low that led to a market break in previous market structure from the daily candlestick open, okay? So what we have to understand as traders is this is the market showing us a potential sign of reversal. And if this area holds, then we could be in for a capitulation event on XRP. And that's just logic, right? Logically speaking, for this market to continue down, it would need to break this area of interest. Why? Because this is the last area of interest that the market makers showed us a willingness to reverse the market. How? They failed to create a lower low, lower high, lower low formation and continuation. What did they do instead? They showed us a sign that they wanted to reverse the market by grabbing liquidity, shifting momentum, creating a higher low, higher high formation. We know that the banking institutions are the only people that can make this pattern, okay? And we see all of that happen in New York session. So on the hourly chart, down from the 3 hourly chart, I identified all that. So my ideology behind this, and that is why I posted this to you guys on Twitter, okay? Where I posted to you guys these 3 downwards arrows on Twitter, and you guys can go check that out, and I'll upload that for this YouTube video breakdown. But I posted an analysis something like this, right? Where I had these 3 downward arrows on XRP, okay? And then after this event, right, regardless if we go lower or we capitulate from this area right here, the market needed to revisit this area of significance, which was where the banking institutions shifted momentum and put in their first order after grabbing liquidity, okay? And you guys can see that here. I talk about that area of significance time and time again on the YouTube channel, in the fractal nature of things and on the higher time frame. And when you can see them in tandem, the higher time frame with the lower time frame price action coming in to give you a bullish signal, which again is this pattern, guys. You need to pay attention to this pattern. A previous low, a market grab of liquidity, match of bullish momentum, and a higher low formation that leads to a new high. This is a pattern that indicates that bank and institutional traders are in control of the market, okay? And we see that on the hourly time frame in this area. So I had this area of interest to say to myself, well, if this is the grab of liquidity, this is the higher low that leads to a new B move that breaks previous structure, this is the new A to B move as of right now. That is what the market is telling us. And as you guys can see, time and time again, New York session continuously adds to this position, okay? What I'm gonna prove to you guys here is look at this. Here's a New York session buy where they add to this position. Here's a New York session buy where they're adding to this position. Here's a New York session buy because they're adding to this position. Same thing here, New York session buy, 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 end of day, New York session buy, New York session buy, New York session buy. And now again today, New York session buy. The banking institutions are adding to the order where they reversed the market previously. So again, logically speaking, if the banking institutions do not reverse price action from here, what is going to need to happen? A break of this ladder is going to need to come into fruition, which will entice lower price action targets or will solidify lower price action targets. But until that happens, we can see a reoccurring theme in this market structure. And it is that banking institutions for New York session are currently giving themselves discount to take buys to add to their overall order. And if this higher low holds, we could see the market reverse to come and grab all the liquidity above this like retail pattern channel. I don't even know, like I said, what people want to call it, but we know that liquidity exists above these highs. Again, what I do in the market is I trade an edge. I trade logic. I trade what the banking institutions are doing and not what the rest of the retail herd is doing. So now giving you guys that hourly perspective, that was my mindset coming into this area of significance. Now let's go down to the 15-minute chart so I can show you guys in detail how I got that, how I extended that over, and then how I utilize that on the lower time frame to catch this beautiful RR trade that I'm currently still floating in, okay? I'm not sitting here saying that my strategy is 100% right because it's not. There's times where I lose in the market as well. But remember, I will keep saying this. Our goal in the market is to give yourself a logical edge. 90% of people aren't trading with a logical edge. They're trading based off of emotions or some Fibonacci or some indicator or some whatever, okay? So let's go down to the lower time frame. And again, just trading that way is going to get you destroyed in this market, not financial advice. You can continue to do it, or you can continue to move with a team who has a mentor and other mentors on the team that show you time and time again that this strategy works. So check this out, okay? Let's turn on our session indicators real fast, just what I've gone over on the YouTube channel, looking at where bank and institutional orders and understanding that 9 times out of 10, they put in two of the biggest orders during their session, and the rest of the session is usually manipulation. So here we see one institutional order for New York and the second institutional order for New York. So highlighting from the candlestick bodies down to the wick and extending that all the way to the right-hand side, we can assume that if the bank and institutions revisit this area, because this area led to a break in market structure, that if this level holds, they are adding to their overall position, okay? All of that knowledge combined and extending that area over to the right-hand side, look at what I was able to do on today's market price action information, okay? Now going down to the 10-minute chart, I wanna show you guys the manipulation window, okay? So before I break down this trade, what can you guys see take place in this area before New York session starts? Here's New York session. This is the area in the price action that we would have had to interpret all with the higher time frame breakdown. A lot of people will say, oh, hindsight testing is bullcrap. No, it's not. This is all the price action information we would have had coming into this New York session. So with the higher time frame analysis, now we're on the 10-minute chart. We have our higher time frame area of interest. We are now on the lower time frame, and we know higher time frame takes precedence. So we're not going to be looking to buy yet because we already have an area of interest that we know as institutional retail traders, which is what I like to call ourselves. We are waiting for the best institutional discount, and we've already highlighted that. So we're sitting on our hands at this point. What as CYPRX traders can we identify in the form of manipulation that takes place prior to, even if you don't add on the manipulation window, just looking at this price pattern, what can we see here? What can we see here? Can anybody answer that?
Early sellers in the market.
Okay, yes, Emiliano, good eye, right? We do see early sellers prior to New York session taking place here, but what else do we see? Let's look at the lows.
Oh, equal lows.
Equal lows, right? We see equal lows. We see a retail double bottom formation or retail supportive methodology trading happening in this area. And it just so happens to take place in the manipulation window during New York session, which is generally right here in this vicinity. Okay, so we can see how the bank and institutions manipulated price to create a liquidity trap to grab that momentum, to grab that liquidity to take their order, which is what? Off of the discounted price from higher time frame that I've already given you guys. So having all that information, I literally just drew this on the chart this morning and sat on my hands and waited, and look at how it played out. There's New York session open. Let's go down to the 5-minute chart. I want to show you guys how they manipulated buyers. Right when New York session opened, look at this. They enticed buyers one more time with this bullish candlestick to build more liquidity in the form of what? Now we have a double bottom beneath this area, but on the 1-minute chart, what do you think is in this area right here?
A lot of liquidity.
Trendline liquidity, right? Okay, so now we have liquidity on the higher time frame, i.e. the 15-minute, the 10-minute. We have an area of interest on the 1 hour and the 3 hour in the form of higher time frame discount, and we have 5-minute manipulation. Now let's go down to the 1 minute, and I want to show you guys the level of accuracy. Here's the trend line liquidity. Here is the manipulation window, you guys, that I teach you all time and time and time again. Okay, look at how this is so accurate. This is insane. Okay, okay, there's your manipulation window. We see that the double bottom was created in the manipulation window. We see that Emiliano had pointed out early sellers. Those individuals were already liquidated right here in the form of this double top. And now we see trend line liquidity. So we have what is called now an edge in the market. You have to ask yourself as traders, am I going to chase this market and enter into a position? Or am I going to wait to see if my logical analysis plays out? And 9 times out of 10, when you set yourself up with logic in the market, it literally unfolds before your eyes and you can't even believe it's happening. Okay, watch this. As soon as we break out of the manipulation window, they come and they attack the trend line liquidity, and they come and attack the double bottom formation liquidity right here that was created during London and New York session manipulation window. And then they reject the higher time frame discount, which is where I was looking at. I had alarms set. I sent a tweet out to you guys on Twitter that said, let's pay attention to 38 cents with the little eye emoji. I literally sent that to you guys. Why? This is exactly why. Giving you guys a fully diluted breakdown of why I tweet stuff out, showing you all ahead of the time, ahead of when this trade happened, to pay attention to these key levels. Okay. Hopefully people that follow me on Twitter are eating good because I'm giving out signals subliminally left and right. So watch this. They break out of the manipulation window. We see a forceful bully push down into that liquidity area. Okay. When the market moves like this, you should literally know at this point what's going on. The market makers are bullying retail traders. They're overpowering retail traders that were accumulating orders all in this area, all in these areas. Okay. You think retail traders are the ones with the amount of money to move this market like this? You're wrong. This is institutional money. And then they take their buy positions. So check this out. Now we're floating in this trade position. I entered right underneath the 38-cent psychological level. And then just taking you back to the higher time frame to correlate all of this with how you properly draw on your Fibonacci, okay? Because everybody is completely lost in the sauce with how they draw their fib on properly. Going back to the higher time frame, I've mentioned to you guys on the CYPRX video content and on the YouTube channel that where we draw our Fibonacci from, or where we like to draw it from the best, where it's the most accurate, is after price creates a higher low, after price grabs liquidity. Well, where would that be at? From this A to B move. With the definition that I just gave you, drawing your Fibonacci from the higher low that sets itself in place, that leads to a market break in structure that solidifies a potential reversal, that is where you want to take your fib from. So from this low to the high and extending that all the way over to solidify all of my confluences, we had about an 85 to 90% discount on the overall buy position from the discounted area that I had mentioned to you guys over to the left-hand side. This is where I place my buy on the higher time frame. And this is, again, why I'm looking for that 1 to 5 to maybe 1 to 12 risk reward ratio. Because if this is a proper Fibonacci retracement, how you're supposed to draw your fib on, and if this market does capitulate, we could see a potential 0% extension, which would come for the liquidity above B. And if the market melts to that liquidity, we could see a 50% Fibonacci extension, which would correlate in filling all of the imbalance in these candlesticks, okay? So that would then again be a 1 to 9 to maybe even 1 to 12 if we bust above this liquidity here. And that was my logic behind this entire trade entry, okay? Showing you guys logic, even if the market reverses itself now and continues to go down, okay? If I wanted to, which I'm not just yet until the lower time frame makes a higher low, I'm gonna monitor this trade, but I'm gonna move my stops to break even and potentially ride this wave back to the upside. And if not, I'm gonna get stopped out at break even and I'm going to experience more discounted price. But based off the analogy that I just gave you guys, okay, you guys can see how even just putting $1,000 into this market with the strategy that I just taught you, your portfolio would be up 6%, okay? That's 6 times more money than what a bank and institution would give you. Again, having an investor's perspective, if you're just looking to grow an account or maybe trade leveraged, you need to have a strategy that is going to prove time and time again results. It is not going to guarantee results, but it is proven time and time again that this is what the bank and institutions do. This is how they move. So, like I say, nothing is guaranteed in this market. Our goal as traders is to give ourselves a logical edge in this market to what is going to potentially play out based off of past price action information with combined current price action information from a top-down analysis. And that's not even getting into psychological levels, moving averages. There's so many more gems that I give to the students. But this way of analyzing these markets is unheard of in this market. What we're doing here at CYPRX, we're just getting started. We're just getting started. We're not about to let these elites play games with us. I don't know about the rest of you all, but I know dang sure that the rest of the CYPRX students are with me on not allowing these market manipulators to play mind games on us, okay? And I'm just gonna drop the mic right there. If you wanna be a part of that movement and you're not a part of that movement, just keep in mind, we're closing out the mentorship to the general public, okay? Towards the end of this year, it's gonna be a completely private and anonymous community where the general public's not gonna be able to join. It's gonna be the first year and a half of students that wanted to take the initiative to excel in their trading, and we're gonna run with just those people. If you're here for the long term, you really wanna accelerate in your trading career, y'all already know what it is. CYPRX link in the description. That's all I have to say today, guys. I hope that this trade entry blew your mind.
Fire. Yeah, it did.
Fire, bro. Fire it. Fire it. Fire flame. Pa, 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 pa. 27 years old, mark my words. I'm retiring myself and both my parents before I'm 35. Plain and simple. I'll end it there. I'm going to chop this up, slap it on the YouTube. The YouTube's growing. When we hit like 10, 15K, we're going to start we're going to vlog. That is going to be extremely cool.
Yeah, nice.
Watching the growth over time. I'll see you guys. I'm going to get off here. I'm going to edit
Right, brother.
upload.
Thank you for your time.
Hope everybody has a good day.
Likewise, man.
Thank you.
You guys are welcome. Alrighty, so I hope you enjoyed viewing a piece of today's Zoom call with the general public and the CYPRX advanced students. Really do appreciate the love and the support. Again, make sure before you head out, you do subscribe to the YouTube channel. We are trying to grow a page here, and we really do appreciate all the love and the support. As always, be cognizant, be aware, and I will see you guys in the next video breakdown. Everybody enjoy their weekend.